Let's get into it. I am very excited for this one. This is a very important, educational video. This is something that really helped me as a trader and early in my journey as a trader. Once I started implementing it, on a daily basis, and trading and journaling goes hand in hand. So, if you stay in order, right, the things that I'm teaching you and that I'm giving you, these are all, useful tools that you need to become a consistently independent, profitable trader. You know, at the end of the day, YouTube is content, right? So with me, you're not going to get the flashy lampos and the watches. I'm making videos that's actually going to help you and teach you to become a profitable trader, right? I'm making videos on how to pick option contracts, right? Stuff like that is boring. It's not entertaining, but that's the stuff that you actually need to see in order to make it in this game. So I really want to give you guys this educational video on, how to journal. How many people are trying to make videos like that? So the whole point of everything that I'm doing is to actually educate you and teach you. So I'm very excited for this one. This is gonna hit home for a lot of you. It's gonna make you self-reflect. It's gonna make you look at things a little differently, how you trade differently, look at yourself in the mirror, but it's gonna be needed. So I'm very excited for this. Now let's get into it. So first things first, we gotta ask ourselves, why should we journal as traders? That's the number one thing. Why are we journaling anyway as traders? Why? Because if you don't track data, you can't fix it. If you don't track data, you can't fix it. The definition of insanity is doing the same thing over and over and over again and expecting a different outcome. You hear me say that all the time. And I'm gonna say that one more time. The definition of insanity is doing the same thing over and over again and expecting a different outcome. So, what do most traders do? New beginner traders, right? What do most of them do? They guess while they're losing. They're not thoroughly writing down, journaling, trying to figure out what it is that they're doing wrong. They're guessing why they are losing. They blame the markets for losing. Two individuals that I studied religiously, Mark Douglas and Tom Hogarth. And something that Mark Douglas says is he says that your success and failure in the market is not because of the markets, it's because of you. If you are not profitable in the market, it's because of you. And if you are consistently profitable in the market, it's because of you. So most new traders, they blame the market for losing. And then they blame the strategy and they jump to a new one and it becomes a cycle. Why? Because they're looking for the golden strategy. Not too long ago, someone told me, your strategy isn't that safe as you think it is. Trading is not safe. The only thing that makes trading safe is proper risk management. It doesn't matter if you trade individual stocks. It doesn't matter if you trade options, if you swing trade. The only thing that makes trading safe is having proper risk management. I can't stress that enough. At the end of the day, trading is all probabilities, it's not certainties. So, a lot of new traders, they come and they look for the golden strategy. There is no golden strategy. Every single strategy in the stock market works. It's us as humans that mess up that strategy. I really hope that makes sense. What do professional traders do? They track everything. They track everything. They fix one mistake at a time. This is how you make it as a trader. You find your weaknesses and your mistakes and you fix them. You turn your losses into data and you treat them as a lesson. The reason I believe that I'm a great trader is because I failed my way to success. I'll say that one more time. The reason I believe that I'm personally a great trader is because I failed my way to success. All my mistakes that I was making as a rookie, starting off, being impulsive, revenge trading, being emotional, being emotionally attached to the outcome, trying to control the outcome, breaking my rules, all those things. What did I do? I fixed them. I failed my way to success. I worked on those things. I saw, okay, what do I need to work on? What are my weaknesses? Let me work on these, right? And I turn those losses into lessons. And as you do that along the way, and you start turning, your weaknesses into strength, you're adding tools to your toolbox to make you a consistently profitable trader. So again, why is journaling so important? You spot your bad habits. What are your weaknesses? Fix them. When I was a kid, something that my mom used to tell me, two things she used to always tell me. She says, one, the worst person I ever lied to is yourself. And two, no one knows you better than you. So only you know your weaknesses. Only you know if you're impulsive, you revenge trade. Are you full size every single trade you take? What are your weaknesses? Whatever they are, you need to fix them. That's the only way you're going to become consistently profitable. That's the only way you're going to start making money in the markets. Like I just said, the definition of insanity is doing the same thing over and over again and expecting a different outcome. So what are your weaknesses? Fix them. Do you revenge trade? If so, you're thinking in terms of certainties and not probabilities. You are trying to control and predict the outcome. I can't stress this enough. As you always hear me say in my trades, right? You hear me say, whatever's going to happen is going to happen. I don't control or predict the outcome of a trade because I can't. There's only two guaranteed things that you control as a trader. Control your emotions and your risk. That's it. You have to learn to think in terms of probabilities. So I'll explain it this way. If you take a trade and you lose that trade and you're upset that you lost that trade, that's because you expected to win that trade. That means you're thinking in terms of certainties, not probabilities. I already gave you the definition of this, and I know a lot of people don't know this. What is the definition of an edge in the market, right? The definition of having a proven edge in the market means that you put the probabilities in your favor over a period of time. I can't stress that enough. So if you're revenge trading, right, you're thinking in terms of certainties, not probabilities. You're trying to control the outcome of a trade. You're trying to predict the outcome of a trade. Or you're in too heavy. You're trading with money you can't afford to lose. Rule number one as a trader. Rule number one, and I know a lot of people have different rules. No, no, no. This is rule number one. Never trade with money you can't afford to lose. I can't stress that enough. Never trade with money you can't afford to lose. If I go into a trade with 30,000 and my stop loss is 10%, that doesn't matter. I can afford to lose $30,000 on that trade because anything can happen in a trade. So that's rule number one as a trader. Never trade with money you can't afford to lose, right? What's your bad habits? Are you not following your system? I can't tell you how many times people send me their trades and like, why am I not winning? Why is it not working? If you trade the break and retest and you get a breakout, right, that FOMO kicks in, so you go long. That's why you lost the trade, because on the pullback it didn't hold. You didn't trade the break and retest. You traded a breakout. So are you following your system? Right? Spot your bad habits. Are you forcing trades every day? Like I said, my edge in the market is less is more, quality over quantity. I promise you, when I started to trade less, I started making a lot of money. Less is more. Not every day is a trading day. Like I said, on average, I take roughly 3 trades a week, 3 to 4 trades a week. But on average, it comes to about 3 trades a week. Less is more. You don't need to trade a lot to make a lot of money in the market. Identify your edge. You need to know the pros and cons to your system. I can't stress that enough, right? This is why journaling is important. Over time, you're gathering data, the pros and cons to your system. It doesn't matter if you're a swing trader, breakout trader, break and retest. Everything has a pro and con to it. So what are the cons of the break and retest? Consolidations and challenge. This is why I stay away from no trade zones, because I know those are low probability environments. Every trade that I take, in my opinion, based on my edge, are high probability shots. A plus shots. I said this a while ago. You need to write down the definition of an A plus setup in your system and then go back and look at every single trade you took. If it does not correlate with the definition of an A plus setup, why did you take that trade? So every trade that I take is an A plus setup in my book. Less is more. You need to know that system like the back of your hand. You have to. You got to know the pros. You got to know the cons. You got to know when to press on the gas, when to be conservative. You got to know your system like the back of your hand. These things take time. They take months. They take years, right? Understand what market conditions your edge thrives in and when it doesn't. No one has helps you not take bad trades. How do you know these things? By journaling, tracking, getting data, and most importantly, it builds discipline. Knowing all these things about yourself and your discipline is your edge. These are the proper steps to being a consistently profitable trader. Can't stress this enough. Discipline is the most important trait as a trader. I am very disciplined. I do not FOMO. I do not step away from my rules. I do not shy away from them. I don't feel like, oh man, I missed a trade, or you know what? I didn't really get the retest, but I'm gonna take it anyway. No, I am disciplined. When I go into the market, for me personally, I believe that no one's more disciplined than me and no one's a better loser than me. I'm a great loser because when I lose, I don't go and tilt. I don't revenge. I don't take it personal. I understand, hey, I took a high probability shot. 7 times out of 10, this works. This time it didn't. So build it, journaling builds your discipline, right? That's so important. You're never going to be a profitable trader if you do not have discipline. I don't believe in motivation. You know, a lot of people tell me that I motivate them, and I appreciate that, but that's not my job, right? Motivation is an emotion that comes and goes, just like happiness and sadness. Discipline is 24/7, 365. So journaling properly and getting all these things about yourself, about your system, it builds discipline. So this is a non-negotiable. These are things that you have to record, and journal every single day. I'm trying to give you some ideas on what you should be looking at every single day. So every trade, right? You need the ticker that you're trading, the date, and the time. You got to know these things. Do you trade the first hour? Do the first 2 hours? I personally know people that they only trade during power hour, which is the last hour of market open, right? So going into the market closing, that last hour, what are they doing? They're trading. So you got to know the date and time, right? The setup. What's your setup? Break and retest, a breakout trader, a swing trader, stop loss. Something that Mark Douglas says, and I can't stress this enough. Like I said, we are risk managers before we are traders. If you notice that everything that I'm teaching you, at the end of the day, the conclusion of everything that I'm teaching you falls under risk management. Journaling and having data and building these things falls under risk management. So something that Mark Douglas says is before there's 10 principles to a trade. Before every single trade you take, you should have a predefined risk. This is why I say I don't care about how much money that I make in a trade because I don't know how much I'll make in a trade. We don't know, right? The thing can go on a crazy rip, it can rally, those contracts start to flip in the money, all those things. But what's the one thing I do know is I know how much I'm gonna lose on a trade before I take that trade because you can control that. That's why I say the only two things you can control is your risk and your emotions. I can control how much I go into a trade with 5,000, 10,000. I can control if my stop loss get hit, I respect my stop loss or not. So you always have to have predefined risk before you go into a trade. You are gambling if you enter a trade without a stop loss. You're in the Wild West. RR. This is something that I can't stress enough, right? Every trade needs an RR. How much are you risking to make X amount? A lot of new traders think that, you need a high win percentage, and I try and explain to people you don't. A great example is one of my biggest months ever in my trading career. That entire month, I had a 30% win rate, and that was my biggest winning month ever in my trading career. A great example as well is there's 5 trading days in a week. You can win 4 out of the 5 trading days, right? You have 4 green days and 1 red day, and still in that week red. So those are just a couple of examples on, your win percentages does not matter. I can't stress that enough. You need to focus on your R multiple. You're risking X amount to make X amount. So how much are you risking to make 10,000, 3,000? Sit in your trade, embrace it, let your profit target get hit. And then this is my edge. I can't stress this enough. This is one I really want to hit on. Keep your position size in the same. You have to record this and you have to do this. Keep your position size in the same. This is how you get the most accurate data and have consistent wins and losses. Keyword here, consistent wins and consistent losses. I'll give you an example. Your losses should not be 300, 3,000, 200, 4,000. So this is why you should keep your position size in the same. Let's say it's a Monday, right? And your average position size is $10,000. Stick with that. Now, let's say you take a big loss on Monday, or just a normal loss on your $10,000 position size, you take a loss. The next day is Tuesday. You want to make your loss back. So what do? You scale up. Now you're in 20,000, and then you take a loss, and now it's bigger. And then the following day, right, you've already scared because you lost 2 days in a row, so you're going to scale down to $5,000 so you don't have a big loss. And then you actually end up having a very nice win, a big, decent win. But guess what? That win is way smaller than your 2 losses you took. So keep your position size in the same. That's how you collect accurate data. That's how you have consistent wins and losses. So for me, my average position size is anywhere between 20 to 30,000. I know that, and I take one trade a day. So you're making it very hard on yourself to become consistently profitable if every single day you're taking a trade and your position size and it's just all over the place. One day it's 15,000, one day it's 2,000, one day it's 500. Someone once told me a very long time ago, it is 10 times more impressive if you can come across a trader who can consistently make $50 a day. If you show me that you had a green month, but I'm looking at your chart and it's like this day was $50 and this day was $80 and then you took a $2,000 loss and this it's just all over the place. So I can't stress this enough. Keep your position size in the same. You're not helping yourself if you keep scaling up and keep scaling down, because now your wins and your losses are never going to have the chance to actually balance out. You're never going to have the chance of your wins being bigger than your losses if you keep scaling up, and on your losses, you took a loss on a 30,000 position size, and then the next day you're very scared because you just lost. So you scale down to 10,000 and you ended up getting a very big win. But guess what? Your losses are still bigger than your wins because your losses are coming from a larger position size. I really hope that makes sense. And then every trade needs a profit and loss. You need to write down why was it a win and why was it a loss. Till this day, and at the end of this, I'm going to show you my personal journal. Till this day, if I win a trade and if I lose a trade, I'm journaling. Why did this trade work? You got to know the why. What did I do correct? What could I do differently? Right? There's no such thing as perfection, but if you try and achieve perfection, you will achieve greatness. I promise you that much. So for me, when I have a nice winning day, I don't close my laptop and walk away. I properly and thoroughly journal. Okay, what did I do right this trade, and what can I do differently to maximize my win next time? Why was it a loss? Was it a good loss or was it a bad loss? Oh, okay, today was a high probability shot, but the market pulled back, so that caused that caused Nvidia to pull back, right? So you got to know these things. Screenshot everything. This is a big one. Remember, you journaling, you're building your own playbook. This is your edge. You're collecting data. You're collecting evidence. Now, we're going into 2026, so you don't need to screenshot everything, but to make life easier, you can screen record. And you see, I do this myself, right? I'm posting my live trading sessions every single day. You think I'm posting that just for you? No, when I go to the gym and I'm running on the treadmill, I'm watching my own live trading session. Okay, oh, okay, this is how I am, when I get a pullback, or this is what I'm thinking in this time, right? You're collecting your own evidence. This is so important. So you need to screenshot, your chart at entry, your chart at exit. Higher time frame down to the lower time frame. This will help you see if you're on the right side of the fence as soon as you enter the trade. Pictures don't lie. Your memory does, right? Doing this will force you to truly see your mistakes and your strength, and it also gives you a peace of mind of knowing why. How many times have you lost a trade? You don't know why. That's so frustrating, right? You don't know what you're doing wrong. Something that I get very often is a lot of people, they send me their trades and they're like, "Hey, Kel, what am I doing wrong?" And I'm like, "Okay, well, let's zoom out." Okay, well, that's what you're doing wrong. This name is trending on the daily, on the weekly, on the 4 hour, on the 1 hour. This is a trending name to the upside, but you're trying to short it. That's your first mistake. So when you screenshot from the higher time frame down to the lower time frame, you want to see if you're in correlation with the overall market. I can't stress that enough. Okay, so the most important part, as we all know, I'm going to make a separate video on this in the future, is psychology. Write down these things. Write down how you felt before you took a trade, how you felt during the trade, and the feelings after the trade, right? This goes for winning trades too. If you're too happy, that's not a good thing, right? You want to get to the point of being a trader where you have a red day, it doesn't dictate your day. You don't go out into the world, you're mad, you're upset, you're frustrated, you have patience, and you don't want to have a trade where, hey, I feel really good today. You know what? I want to buy you a cup of coffee. That's not a good thing. So, if you're too happy, even after you have a winning trade, that tells me, all right, maybe you're in too heavy and you had a very big winning day. Honestly, for me, that worries me more with traders when they're very happy being on a winning streak, because I know as soon as that winning streak ends, you're gonna tilt. You're gonna go into FOMO. You're gonna blow up, right? I see it all the time. So you need to journal these things. Your emotions are very important. As we know, trading is really 99%, in my opinion, psychology. Trading is very easy. It's a click of a button, buy and sell. We are the ones that make it difficult. So understand these things. Trading is probabilities, not certainties. The market does not care about your feelings. There are no feelings in the market. You think if you go into the market, it's going to be a little bit more lenient on you because you just lost your dog? No, right? The market does not care about your feelings. Hope. There's no such thing as hope. If you keep hoping in the market, you're going to keep losing in the market. Hope is non-existent in the market. Learn to think in probabilities. I can't stress that enough. A lot of people, when they are emotionally attached to these trades, and they're sore losers or they're upset or they're blowing up is because they're thinking in terms of certainties. They believe that they should win. They believe that they did everything right and they lost that trade. Why am I losing the trade and I'm doing everything right? Because the market doesn't work like that. And that's why I keep saying, right? You always have to think about your next 100 trades. Think in terms of probabilities, right? Every time I enter a trade, I don't know what's going to happen. It's not my job to know. So you got to understand that the only two things you can control is your risk and emotions. That's it, right? So examples, on what's a spot for emotions, fear. You got to thoroughly break these things down, right? Why are you scared? What are you scared of, right? Confidence, even that. All right, why did you have confidence? Oh, you had confidence because you made your own analysis, you built your own thesis, you took your trade, and it worked. Journal that. Hesitation, something that Mark Douglas says is the ultimate goal as a trader is to trade without reservation and hesitation. When I'm in a trade or I'm about to take a trade, I'm not thinking, oh man, should I not? I've already done the work when the market is closed. My job is to execute every single time my setup occurs. And if you do that, you will be consistently profitable over a period of time. Every single time my setup occurs, I'm taking my shot with no hesitation because I know it's a high probability setup. I trust myself, I trust my edge, I trust my system. So if you're hesitating, why? Right? Is it the lack of trust in your edge, yourself, or your system? The urge to overtrade. Why is that? Are you greedy? Are you trying to get rich quick? Right? Only you know that. And then reverse trader. Why? Are you a sore loser? Right? Do you take a loss personal? Do you feel like you should have won? These are things that you need to journal down and write. Like I said, I'm a great loser. That is a part of my edge. That's what makes me profitable. That's what makes me a great trader. I feel like no one can lose better than me. When I lose, I smile. I get it because the edge, right? My edge in the market, I understand that every time I take a loss, it puts me closer to a win. That's why I'm trying to teach you. Think in terms of probabilities, and you always have to think about your next 100 trades. You've got to understand these things. Your emotions lead patterns. Journaling exposes them, right? I'll say that one more time. Your emotions lead patterns, but journaling exposes them. There's X amount of reasons on why a lot of people do not make it in trading. And I believe that one of the main reasons as well is trading forces you to look in the mirror. It really does. It forced me to look in the mirror, right? It makes you say, oh man, I thought I had patience, but I don't. I thought I was impulsive, but I am. I thought I was cool, calm, and collected, but I'm not. So trading, journaling exposes your true emotions, exposes your true self, and it does better you, right? If you work on these things and you journal these things down and you try and find what your weak spots are and you dial in on those, that's what's going to lead to becoming a consistently profitable trader. Like I said, right, I failed my way to success, right? So how often should you review? So the things you should review every single day is emotional mistakes and execution errors. And this goes, for what you did good and what you did bad. So what were your emotional mistakes? I'm trying to teach you, right? You got to know the difference between a good loss and a bad loss. A bad loss is something that could have been avoided. A good loss just means the probabilities weren't in your favor when you took that trade. So, if you took a trade and it was a good loss, but then you couldn't accept that loss and then you revenge traded and now you're in a hole, what was your emotional mistake? See what I mean? If you work on that, you avoid that in the future. I hope that makes sense. I really, really do, because I know this can be a little complex to most, but this is very important. And then your execution errors. Okay, if you're a break and retest trader, what did you do wrong? Oh, okay, I traded the breakout before waiting for the retest. Or, oh, I didn't wait for enough displacement before the retest. So these are things that you should journal every single day, weekly. What was your win rate percentage? What was your RR? That's most important. You want to correlate those two things. You want to look at this and say, oh, okay, well, I had an 80% win rate, this week, but my RR wasn't that good. That's why I'm red this week because my wins were bigger than my losses. See, this is what I'm trying to teach you, that your win percentage doesn't matter. It really, really doesn't. I've seen people make six figures in a month that I personally know, and they had a 20% win rate. It does not matter. So RR is the most important. It does not matter if you're winning. What matters is your wins being bigger than your losses. The best setups and the worst setups. Why? Why was it a good one, right? Or was it a bad one? I really hope that makes sense. And then monthly, what you want to do, you want to remove your bad habits, double down on your strengths, and refine your strategies, right? So refine it if needed. What that means is, oh, okay, I can tweak this a little bit here due to market conditions and so on. So you got to know your system like the back of your hand. But monthly, you should be able to look back and say, okay, I did not do good this month on scaling out. I did not do good this month on keeping my position size in the same. Double down on your strength, lean on it, right? If it's a strength, lean on it. Don't shy away from that. And then really the conclusion to all of this is the market rewards three things: patience, self-awareness, and discipline. The market rewards three things: patience, self-awareness, and discipline. But what gives you all those three? Journaling. Journaling builds all these three things for you. Break the cycle. If you keep doing the same bad things over and over, you will never make it. Right? If you keep waking up every single day and you're breaking your rules, you'll never make it. How can you? Right? And then figure out what you're doing wrong and focus on that. Focus on it. So, if you got a paper trade, whatever you got to do, no one knows you better than you. I just told you that, right? So whatever you're doing wrong, just focus on it, lean on it, don't shy away from it. And then, right, success. Working on these things will lead you to success. This is why it takes years to become an elite trader. When you journal and you gather evidence and data, this helps you focus on what to do and what not to do. So a good analogy that was given to me, and I'll give to you, is school. And man, this was a great analogy. And it takes 4+ years. It takes 4+ years to go to high school and get a piece of paper, a high school diploma, a GED. But you know what everyone does? They don't question it. They just go to school for 4 years. It takes 4+ years, 4 or 5 years, honestly, to get out of college. to get a bachelor's degree. And you know what everyone does? No one questions it. They just show up for the 4 years and they do it. Why does trading have to work in 3 months? Why does trading have to work in 4 months? So, you got to approach this with a realistic expectation, a realistic mindset. Think about a doctor, these surgeons who's making X amount a year. You know what I mean? It took them years to get to that point. Because even when you make it out of med school, you still got to do your residency, right? Think about lawyers, how long it takes for them to actually start seeing real money. What makes you think you can put in, work for 48 hours or 3 months and make, $20,000 in a month or $10,000 in a day? So, have realistic expectations. I can't stress that enough. I believe that I really started to take off when I stopped putting a time frame on when I should make it as a trader. I said, you know what? I'm gonna I'm just gonna let be. I'm gonna continue to just show up every day. I'm gonna work on myself. I'm gonna focus on my mistakes. And here I am. Right? If I can do it, you can do it. Journaling is boring, but so is being broke. So your best months will come from the notes that you didn't feel like taking. So till this very day, like I journal every single day, win or loss, even on my cash days. What did I do great today? Right? Today I practice risk management. Cash is still a position. Right? Not trading is still trading. I followed my rules. There was no setup that came to me, so I didn't take a trade. Every single day, even on cash days, I'm journaling. Lastly, I want to give you a visual of, what my journaling looks like. So here, this is every single day, every single day. So my weekly goals are typically going to come from my past week of trading, which pretty much is over here. But weekly goals is things that I want to focus on for that week. I want to make this very clear. I never set money goals. I just told you we don't control how much money we can make. And if you set money goals, you're actually hurting yourself because you'll have a good trade and then you'll probably take another trade again so you can hit that goal. So my goals would be like, oh, okay, I can work on scaling up this week. Last week there was a lot of opportunities to do so, but I didn't do it. Or my goal can be, you know what? If I get a retest again and I don't get stopped out of my position for a loss, I see that as the market giving me an opportunity to add to my position. Little things like that. Reminders. So every single day I have reminders. Okay, is hey, Kel, be cautious. AMD has earnings this week, or Tesla's finally setting up. Whatever it is, right? This is a case by case. Set reminders that I need to see every single day before I even open my charts. Oh, okay. I'm glad I wrote this down, so now I know what to do going into today, right? My weekly goals. I'm keeping that in my mind every day before the market opens. Like, okay, these are things that I want to focus on this week. These are my main focus this week. My close watch list. I only have 2 to 3. So it's either like Nvidia or Tesla or AMD, and I write that ticker down, and then I write down why is it on my close watch list. You see what I mean? This is all the work that goes in before market open. I'm not just waking up and taking trades. And then right after my day is over, my trading day is over, I'm not just closing up shop, right? What were the mistakes that I made? Write that down. What did I do great? Thoroughly write that down. This is every single day. This here to the right hand side, this is my weekly recap. So at the end of the week, I write down things. What did I do great this week? And you'd be surprised. Sometimes this is like a 2-page essay. But I do this every single week. What did I do great this week? Right? And what are the things that I need to work on this week? And then overall, right? What are some things that I like that I did that I didn't like, and so forth? Did I take good losses this week? Did I take bad losses this week? Okay, what are some things that I want to lean on going into next week? And then here. So this is after every single trade that I take. Why did I win this trade? Why did I lose this trade? Was today a good loss? Was it a bad loss? What did I do correctly when I took this trade? What did I do poorly? And you got to understand, you're going to lose plenty of trades and do everything right. You're going to lose plenty of trades and do every single thing right. So this is what I love about TradeZella because, you can make your own templates. You can see here weekly recap, which is this up here in the right-hand corner, right? On my daily journal, this is typically what you'll see. And then my trade notes. After every trade, I'm writing down why I won this trade. What did I do? Why I lost this trade? What did I do? So I hope these things make sense. Don't shy away from it, right? It forces you to, look in the mirror, but journal. Journal is everything. This is your edge. This is your playbook. This is your cheat sheet before going into an exam. I hope that makes sense. Like you're learning about you. You're dialing in on yourself, your strengths, your weaknesses, and you're leaning on them. The same way I always say you need to know the pros and cons to your system, you need to know the pros and cons to yourself, right? What do you do bad? Only you know that. Only you know that. So hope this video hits home for a lot of you. I hope you're able to learn from it. This is something that I do every single day. I'm 5 years into the game. And I still, even after a loss, a win day, a cash day, I'm still thoroughly journaling. And at the end of the week, I'm reviewing everything, right? It's hard to remember these things if you've been trading for 3 months and you don't journal anything. It's hard to remember all these things. But me, if you ask me questions, I'm able to answer. All right, Markel, when do you walk away after 8:30? Right? What's your system? I know it like the back of my hand. What's the average IV? I know it like the back of my hand. What's your weaknesses, Markel? I know it like the back of my hand. For an example, and I'll give you a personal weakness of mine. You guys know me. I'm very big on less is more. I'm very big on one trade a day, win or lose, walk away. My weakness is I know that there's no correlation between trades. Mark Douglas teaches that there are no correlations between trades. Every trade is unique and different in their own way. If I have a nice winning trade and I have another trade set up in that same day, sometimes I really don't take that shot because I don't want to give my money back to the market. I took a high probability shot. I walk away. The trade ends up working out. But what's my weakness there? My mistake? I'm correlating my winning trade with a trade that may or may not work. There's no correlation. So to each their own, right? These are things that I'm working on. I don't care to take a lot of trades. That's not what I do. Less is more is my edge in the market. That's how I have accurate data. That's how my curve, my equity curve, isn't all over the place, right? Steadily goes up. So that's my weakness in the market, and that's something that I'm continuing to work on. So I hope this makes sense. I appreciate the love, support. Hope you guys are learning from these things. I'm giving you all the tools you need I'm giving you all the tools you need to be a consistently profitable trader, right? It may not be the most fun content, right? I'm teaching you how to journal, but these are things that will help you over a long period of time. But I really hope that analogy that I gave you on school helps you, right? It takes 4 years to get a high school diploma. Why does trading have to work in 4 days? You know what I mean? Like, just have a realistic approach. Don't, I have a passion for this. I love this, right? If I wasn't getting paid to do this, I'll still do it. So, know your why. What's your why? No one knows that but you. What do you want from trading? What's your goals for trading? Those things matter. That reflects in how you are as a trader as well. So appreciate the love, support. Feel free if you want to live trade with me every day. That'll be in the bio. Don't forget to like and subscribe, and I will definitely see you guys on the next one.